Thanks for joining David, Kevin, and myself for the market update for the month of January. After a really strong 2023, 2024 started off exactly how we'd hoped it would, with a nice little positive gain. The U.S. stock market, measured by the S&P 500, was up 1.63% in January. The S&P TSX was up 0.3% in January, and the Euro-Asia Pacific region, as measured by the MSCI EAFE, was up 0.53% in January. Unfortunately, all of us that do shop down in the US, our Canadian dollar was a little weak. It was off 1.42%. And the bond market was slightly negative as well. And what we're seeing a lot of is everyone's guessing as to when interest rates are going to fall. At the end of the year, they were expecting it to fall right away, and now they're expecting it to fall a little bit later on in the year. So that's why we're getting a lot of volatility in the bond market. I'm going to pass you over to David and Kevin, and they're going to update you on what else happened in the month of January. Thanks, and take care.
As Harry mentioned, the bond market has been a little bit volatile as of late. To end 2023, investors were quite excited by the notion that the Federal Reserve and the Bank of Canada might begin cutting interest rates sooner than later here in 2024. As economic data has come in early January 2024, at its first meeting, the Federal Reserve pushed back on the notion that interest rates would be coming down quickly or anytime soon. The Fed reiterated that they must continue to see signs that inflation is heading toward its 2% target before they are prepared to make rate cuts. So in January, as a result, the US bond markets and Canadian bond markets fell a little bit as investors repriced their expectations around when interest rates would begin to get cut in the world's largest economy, the United States.
Canadian GDP growth ended 2023 on much stronger footing than originally anticipated. This is according to Statistics Canada's preliminary GDP estimates. The Bank of Canada will continue to monitor these growth trends while keeping an eye on the sticky underlying inflationary pressures. Now, this does not necessarily mean that a rate cut in the first half of 2024 is completely off the table, but similar to the US, the current strength and resilience of the Canadian economy is likely going to push a rate cut a little bit further down the line. We're going to focus on next week's job data release of information to see some more key indicators as to what could happen next.
The overall economic and market performance of 2023 is just the most recent example that assuming something is a foregone conclusion and investing accordingly can be a risky proposition. At the beginning of 2023, the vast majority of economists and prognosticators surveyed were nearly 100% certain that the US would enter a recession at some point in 2023. And yet it never materialized. For those investors who listened to these so-called experts and prognosticators and traded based on the assumption that the US would enter a recession in 2023, they likely missed out on gains that those who remained invested and patient were fortunate enough to receive. As we enter 2024 and look ahead on this year, as great and profitable as it would be to know exactly what's going to happen this year, of course no one does. There will be elections in the United States. A US presidential election will be contested in late 2024. And there will also be, as we know, geopolitical conflict and other things that may come out of left field that impact the global economy. Now, nobody knows exactly what's going to happen, but as in 2023, nothing is a foregone conclusion. People can call for recessions that don't ultimately happen. Recessions can also come out of left field. None of us know what's going to happen, but as long as we remain committed to our investment strategies, remain well diversified, over time, your wealth will continue to compound and grow.
A base outlook of moderating inflation, lower interest rates, and low but positive global economic growth would appear to set the table for a positive, maybe not amazing performance, but positive performance nonetheless moving forward. And I think this will be a sigh of relief for most investors since the past 3 years since COVID have been extremely volatile, up-down years, that we should get a bit more consistency to the market.
And just a friendly reminder for anyone who wants to contemplate making an RSP contribution before this year's deadline that would be deductible against their 2023 income taxes. The deadline this year is February 29th.
And as always, if you do have any other questions, feel free to reach out to Harry, David, or myself at any time.